So a couple of videos ago, I did a video on why the stock market may crash in 2021. In this video, I also revealed that I am actively buying gold on a regular basis. This led to a flurry of comments of people asking, can you reveal your gold strategy? Can you tell us how you're buying gold? And more importantly, is gold a good investment? Well, I am a man of the people, the people's champion. Well, self-declared people's champion. But here I am telling you the pros and the cons of every aspect of investing in gold. Believe it or not, there are many different ways of investing in gold, and some of them are very, very scary, and some of them are very, very safe. But there's a lot of pros and cons mixed in when it comes to buying gold in general. So if you are interested in hedging against inflation and buying some of the good golden stuff, well, make sure you stick around after this. So since the dawn of mankind and civilization as we know it, gold has been the go-to standard when it comes to a currency. Kings and queens have fought wars over it for millennia, and even in modern day society, people who are sending stuff into space are using gold as a vital aspect of their spacecraft. But gold actually fits a bigger purpose. It's a great investment during a recession. And as stock markets get more and more edgy, people are looking at gold more and more often. But I'm sure what you're here for is gold a good investment right now? And we'll come on to that and my thoughts at the end of the video, so make sure you stick around for that. But that said, please note this video is for entertainment purposes and should not be constitutionalized as investment advice in any way, shape or form. And while we're on the channel, please do make sure you have subscribed and turn on the bell, and if you could do me the kindest of kind favors by just going down and making sure that like button is turned blue, it would greatly help me out, so thank you very much. If you want to support the channel even further, there's a Patreon link down in the description where you can get some exclusive perks like the chat room or even the WhatsApp group. And if you want to go one step further and buy some gold, you can do it with eTORO on the pinned comment. Sign up, deposit, and make one trade, even if it's buying gold, and you get free lifetime access to the investing chat room for absolutely free. Now, coming back to gold itself, why is gold popular? Well, as currency keeps getting printed and the Fed keeps printing more and more money, we've just heard that there's a 1.9 trillion stimulus coming. The US dollar is going to get weaker. In fact, majority of currencies worldwide, as they've been printing during this whole pandemic, have been getting weaker and weaker, and gold is a good hedge against that. People can flock to gold, there's only a finite amount of it, and gold will, rise as supply and demand dictates. But that's not the full picture, and like I said, I'll come on to why. Now, when it comes to buying physical bars of gold like these here, which, believe it or not, are actually not really gold, they're just, well, props. Gold doesn't normally look like this, unless, well, this would be very, very expensive. Because gold, believe it or not, is very, very heavy, and this is very, very light. But gold is actually very, very expensive in terms of weight and size. Gold might actually come in forms like this, these little plates with a little design on them. People tend to buy these, or even coins, and then they can easily be stored and they look quite pretty as a paperweight on your desk. And that's one of the pros when it comes to buying physical gold. You can see it, you can feel it, you can use it as a paperweight. Overall, it looks good, and it's an ultimate flex. I mean, coming into someone's house and you see that they've got, some gold with some Russian markings. I don't know if you can see that there. It's like just a nice flex. What is it? Well, it's just a rock. It's just a bit of steel, not even steel, it's a bit of metal that I'm using as a doorstop. But other than that, it does look nice, and you can physically have the safety in your hands and know that it's there to sell as an asset when the time dictates. But if you want to go heavily into gold, because these are only a couple of thousand, if you want to go heavily into gold with hundreds of thousands, then you're going to need to store it, because keeping that stuff at home, if you get robbed, it's too much of an asset. So then you need to look at a safety deposit box and a lot of other cons with it. Now, when it comes to buying physical gold itself, you've got to get it from a reputable source. So you want to be getting it from a jeweler or a family friend and you need to verify it even after that to make sure it is in fact legitimate. In fact, I'd probably go as far as saying there's probably more fake gold bars out there than there is real ones. So just be very, very careful. But there is some real good websites out there. Like JM Bullion is a good one. You can go on there, you can buy stuff and get it delivered to your house. But the downside of buying gold itself really is the premium you pay. Now, when it comes to buying gold, you want to buy something that is a worst case 99.5% pure gold. In fact, for me, it's got to be over 99.9%. But as that dictates, obviously the price is going to go up. But the more pure the gold is, the easier it is to sell and the more solid the asset is. But again, make sure you're buying actual gold, because a lot of people will fool you with, well, fool's gold. Now, as I said, the ultimate pros of holding physical gold is that it looks nice. It's probably going to survive a house fire. So if you are rumbling through the rubble of your house, it's probably going to still be there hanging around somewhere. You get a nice flex and a bit of a god complex when you have loads of physical gold on your hands. Provided it's not too much, it is relatively easy to store. I mean, you can literally drop this in your pocket and you've got a couple of $1,000s there. And it's a good way of storing that rather than holding cash. For example, 10 grand, it's quite bulky. People are looking for this, whereas with gold, hoard it and hide it in any little ornament. But like I said, the big drawbacks with physical gold is there's a lot of fakes out there, but more importantly, there is a spread. You can pay literally a 1% to a 10%, sometimes even higher commission when it comes to buying. Think about it this way, when you go into a jeweler and you buy some gold, even if it's a ring or even diamonds and any precious metal at a jeweler, they need to make a profit. And most of these guys, they're going to charge you way more than 10%. So make sure you're getting it from a reputable firm. Again, JM Bullion's really good on prices in my opinion, but just know that there is a spread there. But provided them costs are down, I don't think you can do too bad, because if you were buying an ETF and things like that, there's going to be charges as well. Which brings me on to point 2, ETFs, gold funds. Now this section itself can be broken down into 3 variants, and you have to be very, very careful to decide which one you want. You've got one that tracks the physical price. It buys and holds physical gold, and then sells it and distributes it when you buy and sell your trade. Doesn't do anything fancy, just physically takes gold and holds it. Gold price goes up, fund goes up, gold price goes down, fund goes down. Very, very simple. Now the second type is someone that's buying and selling all the time and trying to make money that way, but that's not necessarily dependent on the gold price. It depends on how good the fund manager is mixed in with the gold price, if that makes sense. So it's actively managed. It could be buying future contracts, it could be buying physical gold, it could even be buying some form of stock. So that's more of a managed fund. And that rolls off to the third version, which is a gold mining fund. Now you get a lot of these where it's buying into, mines in Tanzania, for example, which are very, very volatile. You don't know what the government's going to do there. And that mine could be closed down and you could see your fund dramatically drop. But out of the 3, I think the one I prefer is buying the physical asset. And then I can just follow the gold price. If it goes up, I make money. If it goes down, I buy more. That's more sensible to me. And for me, I feel like I'm managing my money safer because I'm not taking the risk of somebody else picking a bad investment or buying gold at the highs. It's more my responsibility. So out of that aspect, if you're buying an ETF, I do prefer buying physical gold ETFs rather than, a gold mining ETF, for example. Now, some of the pros of holding these ETFs is, well, you're letting the pros manage your money. It could be less expensive than buying and holding physical gold, and you're getting something legit, provided you're getting into a good ETF. And overall, it's less scammy, if that makes sense. I mean, if you've got an ETF that's listed on a legitimate broker, chances are you're not going to be sold a false product, whereas you can if you buy the physical asset. Now, some of the cons is it doesn't look good, and you don't get the god complex of having these as great paperweights, and you could also have a bad manager. So you've got to weigh that up as well. Now, rolling on to the third way you can get into the gold market is buying individual gold mining stocks. Now, for me, this is a no-no because, like I said, there's a lot of volatility. You're not really mining gold from like Western markets that are more regulated. You're mining it more in Africa and places like that where, you've got slavery issues and you've got government issues and you've got many, many issues as far as, the area goes. So just be very, very careful when it comes to buying and selling gold mining stocks. But a big pro is when you hit a home run, you tend to hit a home run. The downside, when you don't hit a home run, you can blow up your whole account. So just be careful when it comes to buying individual gold mining stocks. And that's why I don't really want to touch on it too much, because it's very, very tough. There is some legitimate good companies out there, like Western companies that are mining over there. But for me, just because gold price is going up doesn't mean that the gold mining stocks go up. It depends simply on supply and demand. So you've got to weigh that up. For me, I think gold is a better hedge than buying a gold mining stock. Now, the fourth way to get into gold is futures and options. Now, you can actually open a contract where you say you're going to buy gold at a set price or sell gold at a set price. You can go long or short, and it's a good way of sort of limiting your initial exposure to said contract. So you can buy this option, the option goes up, and you can sell it before you even have to purchase the gold. But that said, I'm not a big fan of options trading in general because I don't know the market too well. It's just something I've never really ventured into. I've heard horror stories, and I just don't need that risk in my life. So now we know the main ways of how to get into the gold industry. But why does gold do well during a recession? More importantly, why should you buy gold right now? Well, as mentioned, the US is literally printing money like there's no tomorrow. And in fact, as they continue printing money, money gets less and less valuable. So the people who have big size money don't want to hold US dollars because it's getting less valuable as time goes on and as more money is printed. And on top of that, inflation will come in, which will devalue the dollar even more, meaning that it's more and more worthless as time goes on. So people tend to flock to safe havens. We've seen people jump into Bitcoin and things that are less centralized. Things like gold is another one where people will buy into this, demand will go up, and the price will in turn go up. Basic supply and demand. Bitcoin is the modern day gold in my opinion, and that's why I think we've seen the modern day push in Bitcoin. So I can imagine some people sat there thinking, well, why don't I just buy Bitcoin? Because I don't have to have the risk of physically buying and selling gold. Well, to me, I like to stick with what I know. I've bought gold numerous times in the past, and I continue to buy it on a regular basis when markets look toppy. And that way I get a good average. I don't think we've had the full-on push yet in gold prices. So I think gold's still better value than what Bitcoin is. But that said, I don't know where Bitcoin's going to go. I'm not a Bitcoin genius, so just take that with a pinch of salt. But for me, I'd rather buy gold because it's just, in my head, more safe. So like I said, gold is a good hedge against inflation. It's a good way of getting your money working hard for you when inflation comes in and a recession sets in, because people will flock to an asset that they can physically hold that isn't centralized to one single government or currency like the US dollar. Another good reason to buy and hold gold is diversification. It's a good way of just limiting your exposure to stocks. A lot of people are buying stocks, bonds, houses, property, and diversifying their portfolio. And if you have not got any metals in there or any precious metals, you're not fully diversified. So that's another main reason why you should be looking at buying and selling gold, silver, platinum, or lithium. All four very interesting to me. Now, one of the biggest cons when it comes to investing in gold is there's no dividend, there's no annual growth other than the gold price. And for me, that's great because it gives me time to size in, get a good entry. I want about a third of my portfolio before a recession comes in into physical gold at a good price. Now, when I say physical gold, I don't mean just bars. I am buying bars. I'm actually getting bars. I've got, some in the UK, some in Switzerland, some in Moscow, believe it or not, coming here to my house. So don't come and rob me. But jokes aside, they won't be held at my house. They'll actually be held in a safety deposit box at my bank, because holding stuff in your house is a bit crazy. Now, another con is the cost of storing it. Unless you're keeping it at your home, but then you have the risk of having it in your house, safety deposit boxes and things like that can cost you money, along with the cost of holding an ETF, a fund, or anything along them lines. So you need to weigh up the physical cost. Whereas owning a stock, these days it tends to be free on Robinhood. And one of the biggest cons really is something you need to check yourself, and that is taxes. Now, certain locations around the world have hyper taxes on things like gold, especially during a recession. So you need to check what liabilities and taxes you may have. So just be careful when it comes to buying and, more importantly, selling gold, especially on your location. Go and find out what the taxes are. Speak to an accountant, use Google. Google is your friend. Now, you've probably guessed already that I am actively buying gold every single month. In fact, this week alone, I bought some more gold in my iShares in pounds, and I'm looking to buy some more in dollars. And if I get the right opportunity locally with physical gold, then I will buy that as well. But for you personally watching at home, and of course this is not financial advice, but I would not be looking at the physical gold if I was a novice investor. I'd be looking more at buying the iShare route, to be honest, because you might get scammed. There's a lot of risk there, and I do know a little bit more about gold than the average bear, so just bear that in mind. A little bear pun there. Yeah, need to work on my jokes a little bit. But as we know by now, markets are cyclical, and I think markets are coming to be a bit toppy. So it's probably a good time to start diversifying and slowly building into gold. Pray to the gods and pray to Odin, like on this bullion, that the gold prices come down, because that way we can continuously buy. For me, as I said, when that recession comes, I want to have about a third of my portfolio physically in gold, close to break even as I can get. But I'm happy to be right on it, because when I am right on it, and I mean when I am right, not if, when I'm right on it, I will do very well on that investment. Markets are cyclical, gold is cyclical just like that. But majority of videos on the internet will tell you to buy a stock, and at that time when they tell you to buy a stock or buy an investment, it's usually too late. You want to be buying a stock as it's getting good value, and as gold continues to come down, and I fully expect gold price to come down as stimulus keeps getting pumped into the market, it's the time to start diversifying and investing into it. In my opinion, not financial advice. But what I would like to know from you is, have you ever bought physical gold before? Have you ever held it? Did you make money on it? What were your mistakes? What were your cons? Love to have a conversation with you in the comments. We are coming up to 10,000 subscribers. We may even be there by the time this video comes out. And I've got another competition for you beautiful viewers who stuck around here. This piece of gold here, which you can see on screen right now, what do you think this is valued at? Put your answers down in the comments, and people who get within 5% of the correct price of this bar, I will grant one of them a year subscription to TradingView. I'll probably close this competition on the 1st of April, so make sure you get away, do your research, drop your comments down there. If you don't want to enter the competition, just comment the code word down below, which is airhorn. Completely random, I don't know, first word that came to my head. That's it from me. Please triple, quadruple, and what's 5 times, check that that like button is turned blue. Take care, be very, very safe out there. Thank you very much for watching. Peace.